So what is a stock really? You hear the word thrown around all the time, but what does it actually mean to own one? Well, that's exactly what we're going to break down right now.
Seriously, imagine it, owning a piece of one of those giant companies. It sounds kind of out there, but not only is it possible, it's what millions of people do every single day. And it all boils down to this one really powerful idea. You can own a piece of the companies you use and love.
So our goal today is super simple. We're cutting through all the confusing Wall Street jargon to get right to the heart of it, what a stock is, and how it can be a real tool for your own financial future. Let's dive in.
And to really get this, we're going to use an example that I think everyone can connect with. So for a minute, forget the flashing stock tickers and the trading floors. Instead, let's just think about your favorite local pizza shop.
Yeah, you know the one. It's got the perfect crust, the sauce is amazing, it's a great little business, but the owner, she's got much bigger dreams.
She wants to open up a few more locations, maybe get a bigger, better oven, start a real delivery service. But all of that costs money, right? And it's cash she doesn't just have lying around. Now, sure, she could go get a loan, or she could do something way more interesting.
And that, my friends, is where stocks come into the picture. The owner decides to divide up her entire pizza business into thousands of tiny, equal pieces. We call these shares. And by selling these shares, or stock, she's literally selling a tiny slice of ownership to anyone who believes in her pizza.
And this is maybe the single most important idea to grasp. When you buy a stock, you're not just buying some number on a screen. You are buying a small but very real piece of the actual business. You become a part owner.
Now, you might think this is some niche thing, right? For Wall Street types? No way. This idea of ownership is incredibly common. Here in the US, over 60% of adults own stocks in some way. So it's not some exclusive club. It's a huge part of how our economy actually works.
So why do so many people get involved? Well, it all comes down to the potential for growth. Just think about it for a second. The early investors in a company like Apple weren't just buying a stock symbol. They were buying a piece of a vision. They took a chance on a tiny computer company in some guy's garage. And that belief, that small investment, turned into an absolute fortune over time.
Okay, but let's be real for a second. In the real world, it's not always a rocket ship to the moon. With that amazing potential for reward, there is always risk. They're basically two sides of the very same coin.
You know, the logic is actually pretty straightforward. If the company does well, let's say our pizza shop expands and it's a huge hit, profits go way up, then the value of your share also goes up. Why? Because your little piece of the business is now worth more. Your $100 investment might turn into $150. That's a profit. But if the new shops struggle, well, the value of your share can go down. Your $100 could drop to $70, and that, of course, is a loss.
And this is so important. I really need you to hear this. Investing is not a lottery ticket. It is not a get-rich-quick scheme. It involves real risk, and you can absolutely 100% lose money. Really understanding that and accepting it, that's the first step to becoming a smart investor.
Okay, so knowing the risks, how do you actually approach this in a smart way? How do you even begin? Let's talk about a practical game plan for anyone who's just getting started.
First up, let's talk about where people go wrong. Because honestly, most beginners fail for the exact same reasons. They see some stock blowing up on social media, they get that fear of missing out, and they jump in without knowing a single thing about the company. They expect to double their money overnight, and when that doesn't happen, and it almost never does, they panic, sell at a loss, and just quit.
So how do you avoid those traps? Well, here's a much smarter approach. A simple 5-step game plan. Number 1, learn the basics, which, hey, that's exactly what you're doing right now. 2, use a beginner-friendly app. 3, and this one is so important, start small. You don't need a fortune to get started. You can literally begin with just $10 or $50. 4, focus on strong companies you actually know and understand. And finally, number 5, the most important rule of all. Think long-term. This isn't about what happens tomorrow. It's about where you could be years from now.
You know, that last point about thinking long-term, that really brings us to the most important mindset shift you can make when you're thinking about this stuff. It's all about understanding the big picture.
So what's actually making a stock price bounce around all day? Well, when you strip away all the complicated charts and jargon, it boils down to something really simple: supply and demand. That's it. If a company is doing great things and more people want to buy its stock than sell it, the price has to go up. And if bad news hits and everyone's trying to sell, the price goes down. That's the basic engine that drives the whole market.
All right, let's pull all of this together. It's so easy to forget. But stocks are not just flashing numbers on a screen. They represent real ownership in real companies. They represent an opportunity to be a part of their success. And when you approach it the right way, they can be a powerful tool for building your own financial future. Look,
The knowledge is out there. The tools, they're easier to use now than they have ever been in history. So really, the only question left is, what future are you going to build?